Bitcoin literally just closed up 7.5% since yesterday's video. It was flirting with the 50% level at 42K, and we are now hitting a local top of $45,000. The Fear and Greed Index has just reset, and something rather interesting has just occurred. Yesterday, we were at 75 at a lower price, and today the greed has dropped off at a higher price. Potentially, we're seeing the early stages of a reversal. We're seeing less greed, or the greed drop off, as the price continues to rise. This is not saying that the trend is completely over and it's the end, but we are seeing some of these signals come through in the markets. In particular, with this altcoin season that everyone has been promised about these 100x gains, and many of these YouTube headlines saying you've got to get in now, the market is going to be over. But as we pointed out in last week's video, looking at where these influencers specifically told us that the market was going to boom, we have seen major rejections and in some cases some major breakdowns. I want to share that with you at the end of the video as well. We've got heaps to get through. It's your home of macro cycle analysis. We cover the stock markets across the world. We also cover Bitcoin, cryptos, and the major one, the real estate cycle. Guys, you know the deal. Links in the top of the video description. Free TIA report is there, and also a 7-day free trial for the Gann swing indicator. More on those later. First things first, we got to cover these news headlines, and I'll just explain to you how I see them playing out. And really, it's essentially the market getting hyped up over not too much. But there is a little issue in here. If these ETFs, or when they do get approved, could this spell the end to it and an early end to the Bitcoin bull market? So the things that we're seeing over the last 24 hours, Bitcoin breaks 42K, fueled by rising ETF hopes. So we're seeing more and more hopes of these ETFs coming out. The next headline, BlackRock received 100 grand seed funding. Maybe someone can explain this to me. Maybe I'm too simple, but what is the big deal about 100 grand shares? An unknown seed investor agreed to purchase 100 grand shares on October 27th. I mean, this is a multi-billion-dollar company. 100 grand is an absolute drop in the ocean. Nonetheless, it captures the news headlines and everyone's quite excited about that. We've also got CEOs predicting Bitcoin to reach 100 grand milestone before the halving. I am not saying that whatsoever. I don't think that is likely at all before the halving, which is in April. But of course, these big price target headlines do get a lot of traction, and we will see this even more so as we head into the next stages of the Bitcoin and cryptocurrency bull market. And I may even put those into the headline titles because that captures attention. And some of you have said, I wish I found this information sooner. And that is the only way that we were going to capture some of that attention so people can see it sooner and not get wrecked by absolute garbage calls. 750K to $1 million Bitcoin in this cycle. That seems to be the target that a lot of these major names are focusing on now. I respect many of these people who have come out with it, but I don't respect the call for 750K. Adam Back, the Blockstream CEO, is calling for 100K before here and 750 to $1 million. I mean, I don't know how to tackle this. It is, to me, absolute freaking garbage, and it doesn't make any sense. Anyway, if they want to have a chat, you know where they can find me, so you can go and hit them up. So this is the next thing that happens with these big moves. We've gone from 42K yesterday to 45K. This same thing is what I posted yesterday, so I won't go into it too much. Essentially, this is what we will hear more of. Charts are worthless. The market's going to go up. Everyone's going to be wealthy. Don't worry about the charts. Just focus on the fundamentals. Michael Saylor, guaranteed, will buy more Bitcoin at higher prices, and potentially the market will come back down and he may go into some negative territory if he doesn't sell any Bitcoin. Charts are not worthless. They've never been worthless. They've been the best thing we've had for the entire time and the entire history. You throw them out, you're throwing the baby out with the bathwater, but that's your call. You're welcome to do so. This comes into the market psychology. So the psychology at the moment, from what I have seen and what we've been covering here on the channel, you can see that on all of our thumbnails here. You might see the thumbnail with the Wyckoff schematic or with the Wall Street cheat sheet where you can go back many months. and see that we were looking at this being the depression and this being the disbelief. So I'm not doing it in hindsight. We were doing it at the time to try and capture what we believed was coming up next for the markets. And I've got a disbelief 1 and a disbelief 2. I know the chart just shows one disbelief, but I think you'd feel a disbelief on the way up out of the low, and then you would feel depression again, but it's a higher low. Then you would feel disbelief again, then a higher low, disbelief again, and a higher low. And that's how these bears have missed out on the entire move. And essentially, if we went, well, we did go from 15K to 45K, there's your 200%. They've missed out on this entire move if they have been waiting for more confirmation and more confirmation before they get in. And sure, some may have ridden this move up, but they're still in a macro bearish stance. And unfortunately, I think, based on what we've seen here and what you guys have been following for many, many, many months now into, well, previously into 2022 as well, is you can see how this has played out and exactly why people miss it. And unfortunately, that is the way the market is. The majority are going to have to miss it in order for these same structures to play out time and time again. We should know by now 90 to 95% of people lose in the markets. Hopefully you're on the side of the 5 or 10% that are at least breaking even and hopefully making some money. But in the long term, this is how it plays out. And it is very unfortunate that most lose, but unfortunately, that is the game that if you're in it, you're not forced to, but that's the game people are playing. So the other thing to the flip side, not to just pick on the bears, but the bulls are also having a disbelievable time that they think these prices are going to go to new all-time highs before the halving. You can see, as I just pointed out with these news headlines, which is why I brought them up, that you're just getting absolutely stupid calls now. 100K milestones, 700 and where was it? 750 grand to $1 million. It's absolutely wild. All I'm saying here is don't get caught up in it, because that is the stuff that will come out again through this stage, the euphoria, the thrill, the belief, and the optimism. And the only way around this, from what I've seen over my history of investing, is to continue to remind ourselves on a daily basis, just for a brief period. And with that said, let's move on to the next piece. It's been a while since I've talked about the links in the video description, but I wanted to offer you something extra for these video links. And in the past, we have done a free trading workshop when you use these links exclusively. Now, it's completely up to you if you want to use them. You don't have to, but on top of the bonuses that they offer here from Bybit and BitGet, we'll have a free trading school coming up. So you'll have to be registered under these to access those free trading schools. So the choice is completely yours. You've got the bonuses there as well. And for the Aussies, $40 free BTC with SwiftX at the moment, if you use that link there in the video description. Now, something really interesting as well. I know some people can't get onto some of these other platforms, but maybe you have seen this, Republic of Palau Digital Residency Program. It says that you can use it for KYCs and ID hotel check-ins and car rentals and whatnot. I'll just leave that in your hands to have a look at. rns.id is the website. Potentially, this might open up for you. Enough said there. Let's get back to the content. So the brief reminder here for the stock markets are S&P 500, 5% away from a new all-time high, getting very close to breaking the July top. The NASDAQ is also roughly 5% away from a new all-time high. It has broken the July top and just having a bit of a pullback now. Healthy corrections in very strong moves to the upside are a must. We can't just go straight up forever. We have to correct, and that looks to be what the NASDAQ is doing at the moment. We also have the Dow Jones, which is 2.3% away from a new all-time high. Maybe it goes on a bit of a correction here, but it's got a lot of room to the downside, well, a little bit of room to the downside to even come back and test those previous tops. And if it wanted to do its own 50% correction, which is absolutely fine, you can move all the way back down to 34,000 points, currently at 36,000 points. We also looked at the shitcoin index of the US stock market, being the Russell 2000, has had a very strong move off a triple bottom here at 1,600 points, now at 1,800. The VIX has been grinding around in the bull market territory zone. The volatility for the S&P 500 has been dropping off, another great sign. And as I also pointed out, the top 50 stocks in Europe, well, the other day they were 1.7% away from a new all-time high. They are now 0.87% away from a new all-time high. That's less than 1% away from a new all-time high. This is for Europe. I know I got a lot of American viewers, and if you are American, hit the subscribe button. You can do much better than the Aussies. 28% of you American, 18% Aussies. Come on, there's more of you in America. Let's go. Okay, so 50 top stocks in Europe are getting very close to a new all-time high. The majority of those are going to be from the UK, Germany, and France as well. The Nifty, we also covered this. This is wild, pumping to new all-time highs. Emerging markets here in India. Essentially, all we're saying there is that there is a lot of appetite for risk coming into this last stage of the 18 to 20 year real estate cycle. This is where we're at. This is going to take time. I'm not talking about it next week or next year, but essentially we're looking at 2024, 2025, potentially 2026 as time where the market is going to continue up. And I think 2023, mark this down, this was the year that the majority missed out. 2023 is the year that they missed out on the gains. And I think they will expect to see similar gains in 2024. So we can take a line here. There's 2024. There's roughly 2024. For the NASDAQ from the October 2022 low, it was about a 50% move to the upside. I don't think they're going to see a 50% move to the upside for 2024, and that is going to scare some people thinking that the market is ending and it has to roll over. But we have to be pretty damn reasonable here. A 50% move in roughly 12 months is phenomenal for the stock markets, and we can't expect that to happen the following year. So I think these late entrants, people who have been waiting for many confirmation signals to get into the market, will potentially get in later. And then 2024 is just going to be a bit of a tough grind. Maybe we hit some new all-time highs. Maybe we come back under. We're going to follow up with that as we get into the following year. But I just wanted to bring that up because I don't think we're going to repeat what 2023 did. This was the year to get in, and I pointed that out in December of 2022. You guys have seen all of those tweets that I've talked about here on the channel, and I've got another predictions coming up. Okay. So that is the commodity cycle, the real estate cycle. Commodity cycle's also heading up, but that's for another video. To Bitcoin and the canceling crypto altcoin season. We're about 33% of the way through the Bitcoin bull market. Now, some are, as I've said, they're only going to call that the bull market when the market breaks out into new all-time highs. I think that's kind of silly to do because you're missing out on all the gains from the downside, well, all the gains from the low. And if you're only waiting for it to be a confirmed bull market to get in, it's not like all the gains have been had and we're never going to see higher prices, but it starts to get a little bit tougher because the volatility increases, the swings to the upside and to the downside increase. So when that happens, it's harder to hold a position because, well, our emotions take control of us. We see big gains in our portfolio, we see big losses in our portfolio, and that is the hardest time to be an investor. Nonetheless, I think we're about that 33% way through the bull market, and we are watching that first half of 2024 for some sort of correction here before the halving, as we have just started to hit our targets. We just hit our 50% target that I've been talking about for months here, $42,000, which is the 50% level. This is yet another signal for the macro bull market. At the time of January 2023, at the time, Bitcoin had crossed its logarithmic downtrend, came back, tested it. That was one big thing. And then also the monthly swing tops were finally broken in January as well. So we were anticipating a potential low there. We weren't sure. There's no exact crystal ball to say that this has to be the low, but it seemed like a low was forming. And that's precisely what happened from that point. We had January, the breakout, and then March, the retest. And we've finally got to our 50% target as well to the upside. So the next major target is $48,000 for a nice clean number, which was the March 2022 monthly swing top. So this is part of our Gann swing indicator that I mentioned earlier there. You got a 7-day free trial. This helps identify the major price turning points and major price resistance and support levels. So that's how we've used it here to continue to forecast what we think is happening next and allow us to understand the strength and the weakness of the market. And right now, this monthly swing has been very, very strong. Eventually, we should see a rejection, but nonetheless, just continue to follow this trend and see how the market or the price reacts to these significant levels. So we've covered the fear and greed. The greed just dropping off here, even though the price has pushed that extra bit higher. So that's something to pay attention to. And like we looked at in yesterday's video, as the fear and greed, basically the market sentiment, reaches these levels above 70 and more importantly above 80, you can probably expect some significant moves to the downside because the emotion has gotten too extreme to the one side. It's like a pendulum. Too far one way, it has to come back to correct. And the same thing happens with the price, same thing happens with the emotion. It's just part of market cycles. So that's where we sit in terms of the market cycles, looking at the market sentiment, but we've got the Wall Street cheat sheet and also the Wyckoff schematics to get through. So the Wall Street cheat sheet, as I've pointed out, looking at this being disbelief. What happens after disbelief? Usually a correction. And then we start to get into this crazy move. And this is all coming into the timing, at least from my projections, for this second half of the 3 years. So we've got this first half that we're in, getting towards the end of that, which basically ends somewhere around that halving point. And then we get into that second half of it where a lot of this craziness comes into the market, which is why I continue to point out these news headlines, because you can start to see them creep in and you can start to see where the narrative is going with stupid targets. I can't say anything else about it apart from just absolute ridiculous garbage targets that unfortunately for the masses are probably going to believe this. There's going to be some other narrative about gold's not the way to go. Bitcoin's always going to go up. You name it. There's something stupid that always comes out and that keeps people from taking profits because they think they're holding the next greatest thing, and rinse and repeat cycles continue on. So with that in mind, the Wyckoff schematic, cycles continuing on. We've looked at phase D and E as the market is potentially in that phase D and E for the Bitcoin schematic. And at the time, I was looking at this back here, which you guys can go back and check out on the channel. We were all the way back in January, February, March in particular, looking at that being part of the accumulation phase. But of course, we were a long time ago. Many were expecting this to be a distribution and for the market to break to lower prices. So we're very much within the minority of the market saying that, look, it's potentially going to go up. We're going to break out higher. And so far, this has been spot on. Now, I'm not going to claim it for myself. I'm just reading what Wyckoff told me, and it's the way that I'm interpreting it. And unfortunately, for those who interpret it as a distribution, they've been on the wrong side of the market. This to me is very much an accumulation schematic, and we've been going up. There are plenty of different schematics. There's schematic 1, 2, 3, whatever there are. Essentially, it's up to you to be able to put these into practice and then use them to your advantage. And I'm just trying to share that with you guys here. So Bitcoin, phase D, phase E. I suspect that we are currently in phase E now, the breakout. And the phase E says that the stock leaves the trading range. Demand is in full control and the markup is obvious to everyone. I mean, not everyone still believes that this is the bull market, but I guess a lot of people can see the price rising and the losses are setting in, and everyone who keeps trying to short on the way up, doubling down on their bearish narrative, is basically getting wrecked. So one day they'll see it. Setbacks such as shakeouts and more typical reactions are usually short-lived. New higher level trading ranges comprising both profit taking and acquisition of additional shares, reaccumulation, by large operators can occur at any point in phase E. This doesn't mean that the institutions, as we've looked at with BlackRock and the rest of those filing ETFs, had to get in down here. More likely, they are getting in at these stages here and potentially at this stage just before the market broke out. The reason is there is probably not enough liquidity at these low levels for them to be able to set their positions. But as the market heats up and there's more market participants, more interest, there is much more liquidity for them to be able to get into the market, especially as we have big surges and then potentially big corrections. They're going to be able to buy on those bigger corrections because that's the time when you'll see more people coming onto the market to sell, and then they can pick it up. So then we'll start to hear those sayings from people, don't lose your Bitcoin to the hedge funds. Don't let the hedge funds take your Bitcoin. And they go down this stupid path of playing one off against the other. It's nonsense in my opinion. So if you want to take that path, go ahead. But yeah, anyway, phase E, the last thing we're looking at here, these trading ranges are sometimes called stepping stones on the way to even higher prices. Stepping stones on the way to even higher prices. Even this little stepping stone in here that we had at $34,000 to $37,000, $38,000 was a stepping stone at the time, as we've now broken out of that level. So as it says, it doesn't mean that it can't come back and correct and then put in a higher low to the previous level. So keep that in mind as well. And if we take a little measured move, as we have done in previous videos, looking at where this could correct to, we're now at 45K even. If we go down 22%, which is what each of these other moves have done, 20 to 22%, that takes us right into $35,000 BTC, which is back into that zone before it broke out. Now, if we do something a little more substantial, going down to about 31K, which is the previous tops, 30 to 32K there, then you're looking at roughly 31%. So it could be the biggest correction there that Bitcoin has seen, but nothing out of the ordinary for a correction within a macro bull market for Bitcoin. So Wyckoff schematics, we might have to put this one to bed now. This might be the last Wyckoff accumulation schematic that we do until we get to the distribution phase at the peaks, which could come, as we looked at here, or here, in the last half of the 3 years. So somewhere probably 12 months out from the peak, we might look at that again, because this next period is going to be sort of markups and markdowns, markups and markdowns. And it's going to be very difficult to be able to find some sort of distribution if we just have a peak like 2017, where it just runs up and not much happens from that point. It just basically peaks out and then corrects. So I said I would get onto crypto as well. Crypto total market cap is also in a similar stage to Bitcoin, because the majority of the market cap is shared by Bitcoin. So this is everything: BTC, ETH, stablecoins, and altcoins. This also has broken out. I think it's probably more so in this phase D, going through the last points of supply and signs of strength, which is what the SOS is. And then we'll start to move into that phase E, where it'll continue up and break that major 50% level here. The major one that we're looking at and waiting for is the total 3. So this is the total cryptocurrency market cap minus Bitcoin and minus ETH. That's what this yellow zigzag line is here. And I can bring that back up so you can see it. Now, for the total cryptocurrency market cap minus Bitcoin, ETH, and the stable coins, I suspect we're probably somewhere in this phase D as it starts to head out. But for the market cap with stable coins, which take it or leave it, it's probably more so in this later stage of phase D. So either way, I think we're in a phase D here for the altcoin market cap, but that doesn't answer the question, how are these altcoins getting their alt season canceled? Well, let's have a look at the altcoins against their Bitcoin pairing. So we've just started a new day, and you can see some of these prices are in the positive here. And yes, in the dollar sense, some of them are going up, but you can see the volume is just starting to dry up here. And there's a little more volume on the red bars than there are on the green bars. So the volume here is the white, and that's for the green, so the days up, and the darker volume is for the red days, the days that are coming down. So you can see the volume is definitely picking up every time these markets come down. The thing is, this has been a very long run to the upside, so it takes time for those that believe the pump is not finished to understand that potentially the pump is finished. I know whenever I talk about this stuff, it always triggers someone who is holding this crap. The point of the game is to make profits from it, not fall in love with it. Remember, we did this last cycle. Don't marry your cryptos. Just, what was the saying? Hit it and quit it. That was the saying. Don't marry them, just hit it and quit it. If you can remember that, you want to tattoo it on the other hand now because you tattooed something already, then that will potentially help you make a few more profits. So I think we could still head up here, but the major part of the move is over. And that's the problem that many of us face, is that we are hoping for much, much bigger prices. And sure, it can go from 63 to 75 or to 80, and they'll say, told you so, there was more in it. Okay, great. Your goal is not to buy the exact bottom and sell the exact top. The goal is to take a nice, sweet, tasty chunk of profits out of the middle. And if you're starting to see some signals that possibly the steam is running out, doesn't mean it has to be the top, but if the steam is running out, then do what you need to do to protect at least some of the profits. You don't have to sell everything here, but you need to protect some of the profits. So that's what we're looking at for these altcoins. And in terms of the altcoins on their BTC values, Solana, just broke down from these lows. It is trying to have a rally here. But again, when we take a look at where the influencers were talking about it back in early November, I did that video and pointed out that almost on the exact day, everyone came out of the woodworks and started to make YouTube videos about altcoins doing 100x. And look what's happened from that point. A month later, it's gone nowhere against its BTC value and also in its USD value. Potentially some of these haven't really gone that far either. There's your 10th and 11th. Sure, you're up a few bucks. Okay, that's the risk you're willing to take. Go for gold. But anyway, that was the time there, and it has now started to break down from these significant levels. You can see that there was strong volume as the market was going up, huge volume on these moves up. And now you don't really see any sort of strong volume on the way up, but you are seeing a rollover here, and you're getting strong volume or stronger volume on the moves to the downside. As I said, it's just potentially early warning signs. And if there is an early warning sign, doesn't mean you have to sell everything, get out. It might just mean now might be a good time to start to take some of those profits. Remember what happened in 2021, 2022? I talked about selling Solana on the breakdowns and selling Solana on some of these pumps when it got to 160 odd dollars. And of course, I was told I was an absolute fool. And what are you doing? This thing's going to go to $500, $1,000. I just want to take profits. That's my goal here. I hope you have a similar goal. So that was just one that I picked on there. I say picked on because everyone gets emotionally attached to their altcoins. Render, it's also having a little bit of a hard time here. It wasn't able to keep going. And there is there's your mid-November. Market really hasn't gone anywhere from that point. You've got Link as well, also having a bit of a hard time here. Now starting to break some of these levels. As I said, early stages. Injective also. Exactly where the lines are, it's just done it again. It's just starting to break these little levels. It is above 50%, but you've got increased volume coming in. And this is all part of your Wyckoff lessons, which we talk a lot about in TIA Premium if you guys are interested. So check out the free report. You've got details there about TIA Premium. I could go on and on and on. We can look at Rune. It really didn't get that much higher. So if you're happy just to hold in there for not much more and then it come all the way back to where it was a month ago, that's your call. But you can see that it is starting to lose a bit of that momentum. So stay vigilant, follow your charts, don't get swept up in the crazy news headlines. Overall, we are still in a macro bull market from what I can tell based on everything that I'm looking at with the stock markets, the real estate cycle, Bitcoin as well. But cryptos are the most volatile. And if there is some opportunity to take some profits, I'm going to do that. Let me know your thoughts in the comments section down below. Is the 100x altcoin season cancelled for now? And we'll pick it up again in 2024. Thanks again for joining me. Hope you have a good one. Until next video, take care and peace out.